In one of my videos, I discussed, the pitfalls of investing in dividend yield stocks, its advantages. This time around, I want to consider the benefits, the advantages of investing in high dividend yield stocks because it tends to maximize your income. It maximizes your income. So number one here is reliable income stream. It guarantees a reliable income stream, particularly if you are a retiree. So high dividend yield stocks provide consistent and predictable income, making them ideal for income-focused investors, especially retirees who rely on dividend payments to sustain their lifestyle, to cover their living expenses. Number two is reinvestment opportunities. There's this dividend reinvestment plan you could take advantage of. Dividend can be reinvested to purchase more shares, potentially compounding your return over time. So when you get a dividend, instead of spending it, you reinvest it in the same company stocks. That would compound your returns, both in capital gains, appreciation, as well as more dividend income coming in. This can lead to long-term growth, of the investment portfolio. Number three is inflation hedge. It can serve as a hedge against inflation. Inflation is something we cannot run away from. We can't escape inflation. Whether you are an investor or you don't invest in the market, we still need to, bear the burden of inflation. So as inflation increases, the steady income from dividend can help offset the rising cost of living, providing a buffer against inflation impacts, against inflation's impact on purchasing power. If the yield is more than inflation, then you'll be able to sustain your lifestyle. In that case, inflation will not outpace your income. So you consider inflation. So this is a typical advantage of high dividend yield stocks. Number four is lower volatility. Lower volatility. So dividend paying companies are, as you all know, they are well established, they are financially stable, they are popular, they are, they are known for, their returns over the years. All right, so meaning they may experience lower price volatility compared to growth stocks, offering a more stable investment option. They possess stability, they don't gyrate and fluctuate, are not as volatile as growth stocks. So they have lower volatility. It's a very important characteristic of high yield, high dividend yield, stocks. Number five is tax efficiency. Tax efficiency. In some regions, in some jurisdictions, dividend may be taxed at a lower rate than one's regular income, making them tax efficient way to generate income for certain investors. You are so mindful of tax implication on your portfolio. You need to consider, high dividend yield stocks, because in some cases, dividends are taxed at a lower rate than even your wages or salary as a salary income, as a salary earner. So your dividend could be taxed at a lower rate. Please like this video and subscribe to this channel if you've not done that. Number six is attractive for long-term investors. So high dividend yield stocks are attractive for those investors who are focused on the long run, the long term. So high dividend yield stocks, can enhance the overall return of an investment portfolio, especially when compounded, over a long period, contributing to wealth accumulation. As long as you have that long-term objective, it's a very nice strategy. Number 7 is reinvestment during market downturn. Reinvestment during market downturn. So during market declines, reinvesting dividends allow investors to buy more shares at lower prices. The market is down, almost at the bottom, and you have the advantage of dividend cash coming in. What do? You reinvest. You buy stocks of high quality company at a reduced price, at an undervalued price. All right. So you discover that during market declines, you will have the opportunity of buying these stocks at a lower listing. So you benefit from price recovery whenever the market rebounds. The market will eventually rebound. So because you bought at a lower price, you stand to gain tremendously. Because usually you make your money when you buy. What an irony. Not when you sell. In other words, if you buy at a sufficiently low price, your margin of safety is very high. Whenever the stock goes up, you will gain tremendously. It's like buying a stock at, let's say, $5 and you sell at $10. You've doubled your investment. That same stock, if you bought it at $7 and you buy and you sell at 10, you discover that you're making barely 50% returns. It all boils down to what? Boils down to your buying price, the price at which you bought the shares. So it's very important. So number 8 is diversification benefits. Diversification benefits. Dividend-paying stocks can offer diversification to income-focused portfolio, by providing regular cash flow while maintaining exposure, to growth opportunities in various sectors. So you can diversify. So in this case, you buy dividend yield stock, high dividend yield stock across different industries, across different sectors, and by so doing, you fully diversify your portfolio. So investing in high dividend yield stock is a smart strategy for generating income. It helps you to generate passive income. It guarantees you, income stream, thus reducing risk and potentially enhancing long-term wealth through reinvestment and compounding. Enhances long-term wealth through reinvestment and compounding over the long term.